Good afternoon, all of you. My name is Vipin Rathi, and welcome to today's panel discussion on digital currencies, the next money. And today we will try to reintroduce some economic concepts from a different perspective. So today we have two panelists with us. First, Tebajani Mohanty. She is one of the top 30 blockchain influencers of India 2021 by Singapore FinTech News and Blockchain Catalyst of India 2019-20 by CoinCrunch, is a solution architect and author of 5 Amazon bestseller blockchain books, some of which are translated to German and Chinese to reach the wider mass. Devajani also works as a self-sovereign identity expert at Earth ID, and she is an honorary faculty with Amity University and is a keynote speaker at many national and international innovation summits. Thank you, Devajani, first of all, to accepting our invitation. Thank you so much. And we have Sharath with us. Sharath Chandra is a keynote speaker, startup mentor, emerging tech evangelist, and ecosystem builder. He advises across sectors with a focus on blockchain and fintech. He drives engagements with governments, policymakers, and industry associations. Sharath is volunteering as a president of India chapter, Government Blockchain Association, and has contributed to the formulation Tamil Nadu government's blockchain policy. Sharath writes thought leadership articles on technology in Express Computer, NESCOM Community, Entrepreneur India, and ET Insights. He is featured regularly in leading publications such as ET Government, Tech Circles, Livemint, and Inc. 42. So first of all, thank you to both of our panelists today for accepting our invitation on such a new concepts. And let me introduce as well for today's agenda as well. We will talk about today. We will talk about currencies. We'll talk about money, banks, central banks, distributed ledger technologies, cryptocurrencies, digital identities, digital assets, and much more. So before I start asking questions from both the panelists, I want to little bit introduce you with the concept of money itself. So we divide money in two parts: fiat money, which is our physical money as well, and virtual money. So physical money, if we say as a fiat money, we call this as a currency, which we can touch. This is like tangible things. But if we talk about virtual money, so this virtual money, we can say it can be a digital currency, it can be a virtual currency, it can be a cryptocurrency, and many more. So we can again distinguish between digital currency, virtual currency as a backed by governments. But if we compare this, it's a cryptocurrency. It is like a more based on the distributed ledger technologies. So this is like virtual money is is mostly an intangible thing. For example, if I want to buy something from, let's suppose, Flipkart, so we are just sending a number. Let's suppose I'm shopping for 1,000 rupees. So this is just a number. So which is again an intangible thing, which is our virtual money. Also, like if we check our balance in our online bank accounts, it's also a number. Let's suppose I have a bank balance of 10,000 rupees. So it's again a number, which is again intangible. So first of all, it's very important to distinguish between currency and money itself. So we can say as a currency is like all the currencies are money, but every money is not a currency because of its property of tangibility and intangibility things. So today, as we talk about like digital currencies and virtual currencies, so we can consider this as by one more example. For example, if I talk about digital wallets, it can be a Paytm, Google Pay wallet. So if let's suppose everyone starting paying these tokens, for example, Paytm token, right? For example, if I have 1,000 rupees in my bank account and if I purchase 1,000 tokens of Paytm, in that case, and if I am transferring these tokens only, and let's suppose whole economy work like this, like people are sending only tokens and tokens, what is the role of bank in that case? This is like a first step, like only transferring from real currency to the virtual one. So we have to understand the role of banks, and who controls the bank is a central bank. So today we will talk about central bank digital currencies. So now I hope you understand about digital currency is in the many forms. So we will talk about a lot of currencies today, but not physical currencies, fiat money. So we only talk about digital currency, virtual currencies, and cryptocurrencies. And the first I want to introduce like first question from my side to Devajani. So we want to understand that what is CBDC, which is central bank digital currency, and how it is similar or how different it is from regular cryptocurrencies.
Sure, sure. So central bank digital currency or CBDC, it uses a digital token to represent, in a virtual way, it needs to represent a fiat currency. Like for a 1 rupee, I'll have a similar 1 rupee equivalent on digital money. So CBDC is backed by a central bank that is one of the primary criteria of CBDC. And that central bank, of course, is representing the nation. And of course, it can be even bigger. Like in some cases, it could be for a region. For example, let's say China is coming up with its CBDC called China's digital yuan. So that is something that can work within the country. But then there is digital euro, which is coming from Europe. So that is what it means, that it can work with multiple countries. Maybe all the Schengen countries would, work with this kind of currency. So now coming to the similarities between crypto and CBDC, well, I can say that perhaps same set of technologies are working over here. So like we are using cryptologies in both, we are using a public key infrastructure in both, and perhaps we are also using blockchain and or DLT in one of the forms. Like we all know that there is difference between blockchain and DLT. Like let's say Bitcoin is a blockchain, right? So here in Bitcoin, we can have millions of users, and each user bears some kind of ownership, because all the transactions have to be voted and validated, right? So that is Bitcoin, a perfect blockchain. Now, but then there are DLTs. The DLTs work on a slightly different principle. So the consensus model in this kind of DLT is different from the consensus model in Bitcoin. So it can work on a proof of stake model, it can work on a proof of identity model. So here who are the verifiers of the transactions is something, are some organization that everyone know and everyone trusts. So that is the DLT model. So that is the difference between, like I said, Bitcoin, Ethereum 1, which works on a proof of work consensus model, and CBDC, which if CBDC, maybe the consensus model is centralized. So what it means is, in CBDC, we might be having one node running by the central bank, and maybe there are certain other nodes. I'm talking about the validated nodes. So those other validated nodes might be some of the biggest banks of the country. So combinedly, they might be, they might be working as a custodians of this kind of DLT network. So this is one major difference. The second thing is the price of the crypto. So we all know that the price of cryptos mostly fluctuate a lot. So I have worked in back in 2018-19. I have worked in a couple of projects in Switzerland, and there we were working in a double-decker blockchain model in the money market. So where we got multiple banks. So each bank is sitting on a node on a blockchain, and then they are actually transferring money, and that money is there is some, of course, some business logic, and then there is a need of an immediate settlement, instant settlement. So at that time we had used, because CBDC was still that time there was no concept of CBDC at that time, maybe in a very initial phase. So we were using Ripple. So I was invited to a couple of international summits where I was asked to explain this model, and mostly people, what they were not happy about it is why you are using Ripple or Bitcoin as a money transfer medium. So why? Because the price of the Bitcoin or price of the Ripple or some other currency, cryptocurrency, they keep on fluctuating every day, every hour, and even in minutes the price keep on fluctuating. So if let's say that I'm transferring $1,000, $2,000, it doesn't matter if it is fluctuates a little bit. But when the banks or bigger organizations are actually transferring money between themselves, so that would be in millions. So even if you can say that the price fluctuates for 0.5%, that is a huge amount of money. So that is why we need CBDC, because in CBDC, the associated crypto or the associated money or the associated digital token, the price doesn't fluctuate unless and until it is decided by the centralized system. So these are, I believe, that some of the two biggest differences between cryptocurrency and CBDC. Yeah, thank you.
Thank you, Debajani. And you talk about a lot of things like blockchain, cryptocurrencies. So I want to introduce Sharath. Like, can you give us a little bit introductions about like blockchain and cryptocurrencies so that we can differentiate between digital currencies and cryptocurrencies and why we need CBDC?
So I would rather begin by saying that CBDCs would be a direct liability on the central bank of a particular country, and digital currencies or virtual currencies may or may not be, unless and until they are backed by a certain basket of currencies like a stable coin, right? And as a technology, most of the cryptocurrencies are powered by the DLT or the blockchain technology, right? So that's one of the major differences between technology and cryptocurrency as one of the ways of incentivization of those particular platforms. I would like to also highlight one particular aspect is that if you look at e-money and digital money 2.0, which is more like CBDC, structure of CBDCs is more token based rather than if you look at e-money, it's more like an account based, right? So that is one of the major differences where CBDCs as a programmable money can be designed in such a way that it can be best suited for use cases like cross-border payments or retail payments. And if I can talk about some of the projects in APAC, especially Bank of Thailand, where they started with the interbank transfer using wholesale CBDCs and gradually expanded that project to a retail CBDC, especially for supply chain financing and invoice tokenization. So it also depends how you want to design the digital currency or the central bank digital currency to suit certain use cases.
Good. Thanks, Sharath. I want to continue this question, like why we need DLT for such things. Like, what is the advantage of using DLT by some central banks so that they can also adapt these digital currencies or cryptocurrencies?
I would say DLT is not a silver bullet in this case, especially if you're looking at a retail CBDC. And I'll give two examples. One is the China's DCEP project or the digital yuan project, where the Chinese government, they themselves are not using DLT for their DCEP project. And the Bank of Thailand, which did a pilot with Consensus, and they came out with a report, I think in February or March this year, and they specifically highlighted the scalability part of DLT. If you're looking at huge number of transactions till today, scalability, especially with DLT, will be a challenge. So DLT may or may not be needed. Even the Bank of England paper talks about that they may not use DLT. So you will still go with the centralized infrastructure. But again, for reconciliation, you might use DLT, but not the entire architecture on a DLT platform.
That's true, because DLT itself is like a more resource driven, and scalability is one of the part. But I want to ask Debajani to you that what do you think? What is the advantages of CBDC?
Yeah, so CBDC comes with many advantages. I remember 6 years back, I read this piece of news that India's love for cash cost India $3.5 billion per a year. And why is it so? It's because, and also the deals that we do cost around 1.7% of the entire GDP. So I do not have the exact details today. Why it happens is mostly because there are total around 2.4 lakhs of ATMs across the country, and the cost of managing the cash is high in India, which is like about 120 billion in 5 years. So CBDC, I won't say with CBDC the prices would be zero because there would be, of course, some maintenance cost, but then it would be much less and almost negligible in comparison to today's cash model. That is number one. Secondly, there is a huge opportunity to enhance the financial inclusion, because like with CBDC, you can even do micro payments. And many new business models can come with micro payments, right? And also there would be complete accountability and traceability, which should lead to end of black marketing, end of money laundering and funding the criminal or terrorism. Also, like I just said, instant settlement would be possible, because currently in most of the countries in the world, even now, the instant settlement feature is not there. So usually, between parties, it's T+1 or T+2 days. And I was working on a instant settlement project, like I said, in Switzerland 2 years back. At that time, we had used Ripple for that, but then it was not accepted because the price fluctuation in cryptocurrencies is high. So obviously, what we need is a stable currency, right? So CBDC can sort out that feature, that issue after instant settlement within the countries. When two parties are working within the countries, or even across countries. And also CBDC is programmable, so we can allow retailers and banks to impose restrictions on transactions or trigger additional validation requests. We can say that if the request is coming from such and such banks, then we can do such additional checks because this is a new bank, maybe something like that. And also with the CBDC, we can, there are different kind of CBDCs. So in retail CBDC especially, people can use their mobile phones. It would be very handy. You can do the money transfer from in a peer-to-peer or within a fraction of a second. So there are many advantages. Maybe with time we'll come to know more.
Yeah, I agree. So I want to summarize like both of your comments, like it will add transparency for central banks. It will help in AML, anti-money laundering and CFTs. It will help in clearance and settlements. It will help in cross-border payments. It will help in, let's say, fake notes and kind of things. Programmable model, as you said. I want to add a little bit, like in the layman term, because we have research scholars from economics background and professors from economics background. I want to add a little bit in their terms as well. For example, payment and interbank settlements. So, for example, we all know about NEFT, right? So it all started with, like, if we talk about digital money or virtual money, so there's a protocol NEFT. So, but the problem was in NFT was that we need an operator, but then they improved it to the RTGS, which is like a fast settlements between the banks. So this is like this is again when we think these simple payments in day-to-day life, we have to understand these payments as well. Like for the RTGS, we are doing a settlement between the banks. And same way when we talk about UPI Beam, and it is like how user can interact with with banks in the faster mode. So this is like we are improving from payment systems, right? From NEFT to RTGS to UPI, now what next? So this is we are talking about next thing that can come up with these things is CBDC can be, or other blockchain things. So Sharath, I want to add, like, people are like most of the time confusing between cryptocurrencies, blockchain, and DLT. So could you tell us, like, in layman term, like how these three things is like different from each other?
So cryptocurrencies are the tokens which incentivize certain platforms so that people who are running those platforms can be interested to build products on those particular platforms. So treat it as more like a powerhouse, a power source for those particular platforms. Now, in private blockchains, you do not need cryptocurrencies, but in public ones, they are powered by tokens called cryptocurrencies. Now, all DLTs will not be, all blockchains will not be DLT, right? So all DLTs may or may not be necessarily blockchains. So it depends upon the consensus they are looking at. I would also like to go back to what Debjani said about cross-border payments and highlight one important aspect is that since India is part of G20, and G20 has a mandate to work on cross-border payments. And that's where the use of retail CBDCs for cross-border payments becomes all the more important. And given the mandate by CPMI, Committee for Payment Market Infrastructure, they are already working on areas like global stable coins, where you will have certain digital currencies, let's say a digital euro or a digital rupee or a digital yuan, which can be pegged to a basket of cryptocurrencies or a basket of fiat currencies. And that can be used to drive cross-border trade. And recently, there was a multi-CBDC project started by Hong Kong Monetary Authority, Central Bank of Saudi Arabia, and Digital Currency Institute of People's Bank of China. So a lot of work is being done in this space, and it also will boil down to the standards, depending upon different CBDC projects we have in different parts of the world. It will also get down to the standards of interoperability. But to begin with, we might have to look at a CBDC which can work with a domestic set of challenges. It has to coexist with cash and other forms of money.
Yeah, so I want to add one more point, like interoperability. Like it is like if you go to other country, we need exchanges, right? So this is like an interoperability, so that if we have a digital yuan, digital dollar, so that it can be easily interoperable between different currencies. So Debajani, I want to ask one more important question here. So what do you think? Like this is like, is it in CBDCs in early phases, or what do you think how India can use these CBDC models, or if you can give us some use cases, like what are the biggest implementations of this CBDC?
Yeah, of course. So CBDC, I believe that India is also trying their hands on CBDC, but then India is perhaps not the first country. So there are CBDC players across the globe in each continent. Like in North America, of course, US Federal Reserve is trying it, Bank of Canada is trying it, Central Bank of Bahamas trying it. In Europe, I already said about digital euro initiative from Europe Central Bank has begun, and then Sweden's Riksbank, which is their central bank, they are trying their hands on it. Bank of England is trying CBDC. In Asia, China's digital yuan by the People's Bank of China, that perhaps is one of the biggest implementation on CBDC. Then, sorry, and Singapore Monetary Authority is also working on it. Bank of Thailand is working on it. Hong Kong's Monetary Authority is working on it. So, but then all these CBDCs might have been architected in different ways, and they are in different stages. I'm not very sure. Perhaps Sarath can throw some light on it. If any of them is in production, is digital yuan in China is in production so far, or?
So I would say China has leapfrogged. They've already launched this particular project, and what they've done is they've also started roping private players. So I will give you one example. So there's a big e-commerce giant called JD.com. So they have said that they will start paying at least 10% of their workforce in digital yuan. So they're roping in e-commerce players, and they're bringing players like Ant and Tencent to create a system where the synthetic model or a hybrid model will come into play, where the central bank will issue digital currencies and private players and commercial banks will be given the task of distributing all these CBDCs. What China is also doing is it's also trying to create a parallel system or to challenge the dollar hegemony, if I can use that term. And why? The reason I'm saying this is because they have already tied up with SWIFT. So digital yuan projects with SWIFT is already going on. So given the backdrop of trade volume which emanates from China, they want to create a system where they're no longer bound by the US world order, and create a system where trade can be easily done using the digital yuan. So they are far more, I would say, progressive and far more promising in that particular aspect. And rest of the countries, they are still catching up. As far as India is concerned, I would rather say that given the set of challenges we have in India, offline use case, especially for retail CBDCs in areas where we have internet connectivity is very, very poor, very, very erratic, offline use case should be explored. And that is one area which is which has not been touched by many countries. A Bank of Japan is working on similar projects, but no other country in the world has touched on the offline payments. China has done some pilot in certain areas, but again, if we are able to pull this off, that will be another great case study for the world to follow.
In continuation to this, like, so could you tell us, like, RBI is working on something, or like, or they are just exploring out, or they have some plans, if you know?
RBI, as per some reports which came out in the media, they're working on a cash-like or general purpose CBDC, where CBDC will be almost equivalent to a cash with certain conditions for anonymity or controlled anonymity, where certain transactions can be made completely anonymous, the way we handle cash. Let's say if I give 10 rupees to you, I mean, no, the bank doesn't need to know, right? So certain transactions can be anonymous, but again, we can't expect a fully anonymous way of transacting in CBDC. So what my guess is, and again, I'm making an educated guess, offline use case will be picking up in a big way. And I have certain, I mean, I can quote you some precedences. So very early this year, RBI came up with a cross-border sandbox, cross-border payment sandbox. And before that, they came up with the offline payment sandbox as well, where they identified certain startups from Bangalore. One was StoneTag. So offline payments is already one priority area for RBI. And given the way our digital payments are working, I mean, we are already much better than our counterparts in Europe. But if you look at the current scenario where we have digital transactions reaching in billions every month, but again, look at the failure rate. So CBDCs can act as another alternate payment ecosystem where you have a backup of payment systems. Even if, let's say, digital transactions are failing, people will have an option to transact via CBDCs. And with the influx of new umbrella entity applicants, like your Tatas and Amazon and Facebook, they're all in the fray. Whenever those applications are functional, and new applicants are functional, CBDCs will be one of the biggest use cases.
Yeah, I agree with this. But you use a lot of terms like retail and wholesale CBDC. So Devajani, could you tell us, like, what are the different types of CBDC we have, so that users can understand differences between wholesale and?
Sure. So CBDC can broadly be divided into two types. One is wholesale CBDC, and the other one is retail CBDC. So even when we say international payments, CBDC for international payments, that is more associated with one or the other. So broadly, these are two different types. The wholesale CBDC is for financial institutions that hold reserve deposits with the central bank. So it could be used to improve the payments and securities settlements for efficiency, like what I was telling you, that let's say there are multiple parties and they're doing some kind of business transaction together, maybe some delivery against payment, something like that, maybe supply chain. So in this case, you can go for instant settlement with the wholesale CBDC. And they can work both in domestic as well as international payments. Like I was telling you, for international payments also, you can work in this model. So in current model, SWIFT takes around 1 to 5 days. Even today, SWIFT takes 1 to 5 days for international money transfer, and it also demands high amount of value. Also, there are huge amount of money that are vested in the Nostro and Vostro accounts for making the SWIFT model to work. So with CBDC, both for within the country or for international money transfer, this is a really lucrative area. So in international money transfer, you can do within like a fraction of a second and with negligible fees. And then we have retail CBDC, which is mostly for payments by individuals and with business. And so obviously, like the nature of this CBDC, the way we handle the CBDC is little different. So the amount of the transaction is, number of transaction is quite much higher than the other model, the wholesale CBDC, but the value is far less. So with this CBDC, new models can arrive, like let's say micropayments would be possible, and it will bring a lot of transparency for money transfer, no fraud, no black money, no funding to terrorists, like I already said. And also with retail CBDC, like what Sarath was just specifying, there are two different models again within it. One is online payment, one is offline payment. So, so how this happens is like in retail CBDC, we have let's say first level is the central bank. The central bank, let's say in a particular year, they're saying that this is the amount of money that I'm transferring to all these banks. So each bank would be running on node. So why DLT is needed over here? Let me tell you. So DLT is especially needed for retail CBDC. So each bank would be running a node on DLT. So each bank again would be having multiple accounts for each of their account holders or users. Now they can say that this account has got this much amount, this account has got this much amount, like that. Now the individual users, on the other hand, would be carrying their own mobile device. On that mobile device, they would be running an app, and that app would be having carrying digital money or CBDC signed by their bank. Like let's say in my mobile device, I would be having, perhaps I'd be having 5 different accounts from 5 different banks, one from ICICI, one from HDFC, like that. So each of them would be saying that ICICI has signed that I have 30,000 rupees in this account, 2 lakhs rupees in this account, like that. So that means that there will be a reconciliation between the bank's node as well as the user's node. Okay. So whenever I'm doing a money transfer, doesn't matter whether I'm doing a money transfer within the bank to somebody within the bank or somebody in some other bank. So whenever I'm sending a transfer request, it can happen online. What I mean by online, that means from my app, I would be sending a request to the bank's node asking for a money transfer, and the money transfer can happen through that bank's node. And both the nodes should be updated. If it is the same node, then only the ledger will be updated. But both the ledgers should be updated if there are 2 different banks. And at the same time, the accounts on the user's mobile phone would be updated. So this is the model what works on a retail CBDC in online mode. But then when I talk about offline mode, that means that perhaps we do not have any internet connection, and perhaps we do not have any even mobile connection. So like what Sarath was referring to. So how that model is to work, that is something that many countries are trying their hands on. So because in many parts of the world, internet is still not available. In many parts of the world, perhaps we might not be having a telephone connection, or maybe even if it is available, not working for 24 hours. So in that kind of situation, how the money transfer would work, that is something that is offline mode of payment that many countries are trying at the moment. So these are the different ways. And then also there is one more CBDC called synthetic CBDC, but that is more to do with the private parties. But I won't consider it a CBDC, but these are the broadly CBDCs that we should know of.
Thanks, Debajani. So now we have like broadly divided a lot of things. For example, digital currency, virtual currency in one box, powered by governments. Cryptocurrencies not powered by governments. It's like cryptocurrencies is like mostly on the DLTs, distributed ledger technology, or blockchain. So Sharad, if you can tell us like which model you see as a future, right? Whether it's a digital currency powered by governments or cryptocurrencies powered by us, like anyone, like means anyone can be a miner, anyone can be a part of this whole replacing banking system with us, with any individual.
I would say it will be coexistence of both digital currencies as an asset class and CBDCs backed by central banks. One will not be able to replace another. It will be a closed coexistence of all the players. And the reason I say this is because there will be certain people who will have a certain risk appetite, and they would like to indulge themselves in areas like cryptocurrencies and make some money out of it. But again, if you want certain businesses to function certain way within the given compliance rules, CBDCs will be necessary, and cash is not going anytime soon. So both cash, digital currencies, and CBDCs will be part of the entire monetary system. And if you talk about the system, I would say it will always be a hybrid model where the central bank will be issuing CBDCs to the commercial entities, and then again, how you want to rope in private players to spur innovation can be. I mean, it's open to imagination to everyone.
Yeah, so I want to also add, like, is it possible, like, which model of direct CBDC or indirect CBDC where central bank directly give this to the user, or indirect ways like using commercial banks? So you are referring about this RBI report. I was reading that report, and they are very concerned about banking system. What will happen to our banking system if this thing come up? So, or they can talk about helicopter money or something like this. So what do you think? Like, they have concerns about this whole banking system. If cryptocurrencies will come out, then what is the need of our banks in that case, and who will regulate all these things? So what do you think? How these policy making people should think about these things? What concerns you think that it is, like, what pros cons you find in these both sides, so that they can start thinking in a different way?
So normally there are two types of risk. One is the risk of disintermediation, which can be easily tackled by putting a cap on the CBDCs, which commercial banks can hold, right? Which even the Euro is proposing. They're saying that for a certain amount of CBDCs, if you breach that threshold, there will be an interest penalty on that. So CBDCs can be designed in such a way that they're not interest bearing. So they will not compete with the normal bank deposits. So that's where the risk of disintermediation to a certain extent will be taken care of. Now, if you talk about a direct CBDC, I believe as early as January this year, right, RBI said that they'll be opening up government securities for people to access those securities online using Retail Direct. So that will be one example of a direct CBDC. So CBDCs can be one of the ways how this government securities can also be looked at. If you're able to transact directly with the RBI, you are actually opening an account with the central bank and dealing with the government securities. That can be one of the ways. But again, that's my own personal belief that will be open to selected players with certain net worth as of now.
Yeah, I agree. And I also want to add, like, one more point here, is how we think. First of all, like, we have to think money in a very different way, how bank work, how central bank works. We have to understand this model. Also, we have to understand how current model works of UPI. For example, anyhow, if we are using Paytm wallet or Google Pay wallet, and we are sending some money, anyhow, we are sending some coins only, right? Which is again virtual. So anyhow, if you consider this as a cryptocurrency, we have wallets, we have transfer money in same way. So we have to understand first that how different parallel things work, like how CBDC parallelly work, UPI parallelly work, and how cash flow also is important now. But let's see how it works in the future as well. So Debajani, one question for you, as you are working with the self-sovereign identities. So could you tell us more about digital identities and how it will be helpful for banks and other central banks?
Yeah, like I remember this morning, I just created a poll on LinkedIn that what type of decentralized digital identity project is most crucial for government? Is it e-voting? Is it e-citizenship? Is it CBDC, or is it health passports? So to be honest with you, the base of everything is digital identity. And digital identity should be associated with your national identity. Because otherwise, if we do not do that, then it would be equivalent to, the risk, in terms of the risk, it would be similar to what we have in Bitcoin today. Like in a Bitcoin, you do not know like who the person is, right? So how do you track that where the money goes? So money can be funded to a terrorist organism. That could be fraud. No, so much of possibilities there. So digital identity is the base of everything. Like it doesn't matter whether you are going for health passport, doesn't matter whether you're going for CBDC, e-voting, whatever you are doing, digital identity should be the base. So what we are trying to do is every person what I'm talking about is a retail CBDC, of course. So every person who is opening a account with a bank, they should be having their digital identity or national identity already there with themselves. And there would be, of course, a stringent background verification by the bank if needed. If it is a decentralized identity already there, I mean, if it is already present, and if it is already certified by the authorities, then that should be associated, that user should be associated with the bank's account. So that association happens on the basis of decentralized digital identity. Why this is decentralized identity is because that would bring a lot of privacy and safety to the transaction. So you don't need to reveal to the world that who you are. There won't be any centralized database, so there won't be any single point of failure. There won't be any what I can say, mass hacking possible. So those things are taken care of. At the same time, the transactions can be through with the utmost security. I'm not able to hear you.
I'm sorry, I was mute. So yeah, you're right. Like these digital identities is a new stuff again in the blockchain domain, that how we can handle these kind of identities with privacy and everything. So Sharath, my question for you is regarding what do you think about cryptocurrency powered by or supported by governments? Is it possible like Gov coins or something, government coins, they will start means delivering these kind of distributed ledger technology based coins in the future? Do you think, is it like a good idea or something?
I wouldn't say, I mean, it's a good idea or a bad idea, but again, I would say it's an idea worth exploring. And I will give you one reason why. If you look at the MSME credit gap, right? So there are a lot of MSMEs who are not able to access credit by the traditional banking route. So tokenized collaterals and loans offered based on those collaterals, crypto can be a one source of wealth for all the budding MSMEs in India. And recently, even Nandan Nilekani talked about if you can add crypto to the UPI stack and bring in more access to credit to people who want to do business. So addressing the MSME credit gap can be one of the areas where cryptocurrencies can be tapped into. And these stocks and these coins can be one of the ways to do it.
Yeah, so also people have a lot of confusion about like, is it legal in India or it's illegal in India? So if you can tell us more about, like, RBI is saying that it's not a good thing. Government is saying, okay, we will see as a digital asset or a currency. So first of all, tell us whether all these currencies are, what do you think, as a digital asset or should be treated as a currency or money or what? Like everyone like is confused right now.
In my personal opinion, I would say it should be treated as an asset class, and it should be left to people to determine whether they want to deal with digital currencies or not. Like the way some people deal with chit funds and some people do not, right? And I think Telangana is the only state, and I stand corrected if I'm not right, that Telangana is the only state which has regulated chit funds. You still have so many chit funds going around in different states like West Bengal, Orissa, where a lot of scams happen almost like every month. Most of the scams are not even reported. So as an asset class, this is worth exploring. But again, as a legal tender, that is open to a lot of interpretation. And that's where regulators have to come in and decide whether it should be treated as a legal tender or not. I would say that there will be certain challenges if you want to use cryptocurrencies as a legal tender, because the volatility in the price will not be able to justify certain business use cases. As far as legality of cryptocurrency is concerned, the Supreme Court verdict makes the earlier RBI ban ineffective. So you are free to deal with cryptocurrencies, but there are certain reports that banks are not even supporting some crypto transactions. So everyone is waiting for the bill, which is supposed to be tabled in the parliament. So let's see, once that bill is out, we should have more clarity. But again, if someone wants to deal in cryptocurrencies, they're free to do that.
Yeah, for now it's free to do that. But as Shah said, we all are waiting for bill on which we can decide that whether it will come in digital asset or as a currency. So let's wait for that. And Debajani, one question for you. What do you think about CBDC offline payments? Like means everyone is talking about here is like we deal in the real world is a fiat money, right? Offline payment kind of things. And
Right.
And if you can tell us more about like what you do in Earth ID and how it is more, why it is so important as a digital identity.
So, so RTID is a London-based decentralized identity platform, which has been awarded recently. So we are working on a scalable decentralized identity platform along with industry leaders in biometrics. And also we are working on many different use cases where we are using emerging technologies as location tracking as well. So like I already said that we all know that CBDC platform, at the base of the CBDC platform, what we need is a very strong decentralized identity platform. So hence, that is something RTID is working on, or what our platform is working both on online as well as offline CBDC retail products. So how that is possible, like I already told you how online retail CBDC framework works, right? So we got a DLT and multiple banks, each bank would be having their own nodes, and then the users should be carrying their own mobile devices. So in the mobile devices, the user's identity lies, like each mobile device is associated with the user's identity, and that identity is also associated with the user's biometrics. So what it means, it is, let's say there is a family, and in that family there are 10 different people. Out of 10 different people, 5 different people have got bank account, but there is only one phone. So how would you how they would be able to access their bank? So that means that not only the mobile device, also the biometrics would play a role, so that it would work as a multi-tenant wallet. So that facility is also provided. So in using one mobile phone, 5 different people in the same family can access their bank accounts in different banks. So that is, I already explained how the online part of the retail CBDC works. And when it comes to the offline mode, so what I mean by offline, that means there is no internet connection and there is no mobile connection. So how would you transfer money? And how, because obviously, because there is no connection means you cannot connect to your bank, or maybe you cannot connect to you cannot connect to to the bank to send a transaction. So maybe we can do it in multiple different ways. Like it could be a pure peer-to-peer transaction. That is also possible. Or if you want to still want to do it through the bank, then there are multiple possibility. One is NFC. So NFC is what do you call it? Near field communication. So that is also possible. So that is a device through, you can just go to the NFC and then you can do it through the NFC. So NFC would do the connection for you. So that is one possibility, instead of, because you don't have a internet connection, you don't have a mobile connection, so you cannot do it. The other possibility is through messaging. So in messaging means you are sending a message to through your telephone network, that I want to transfer this much amount of money from my account to that account. So that would happen through a message. So that means that it won't be instant. So because if, let's say, there is no phone connection or availability of network in your area, so in that case, how that would happen? So on the next connection, that is only possible, but then you have initiated it. So there are many different ways. Even I believe that, I think in China they're doing it peer-to-peer basis. So you are sending the money to another peer without the need of connecting to the bank immediately. Even, it can be an instant process, but whatever might be the process, after a while, whenever there would be a next connection, so that there is a need of a reconciliation between your mobile wallet and the bank, so that it is always in sync. And also because this is a very vulnerable process, because you can keep on sending money, there is no exactly, we know how the double spending works, right? You can keep on sending money, more money than much more money than what is actually available in a wallet. So in order to limit that, what the government is proposing is that the maximum amount that you can pass on in offline mode is that there is a cap on it. So I believe that is 200 rupees in India. They're trying to do it to 200 rupees. So similarly in other countries also, the amount that you can pass on would be a small amount, and also there is a cap to the maximum number of transaction you can do. So you cannot do it more than, let's say, 10 times. So even if you're doing it 200 rupees per transaction, so maximum amount of money you can keep on sending would be up to 2000 rupees. And after your next reconciliation, it would be again reset to 0. So this is how the process would work. So there are different models. So we are trying our hands on it.
Thanks, Debajani. Yeah, that's important that how you're working some hands-on on with different stuff. This is really important. Sharad, I want to ask you this question from Samita Anand from YouTube. She's asking which factors influence fluctuations in cryptocurrencies price?
It can be a mix of both. It can be entirely driven by speculation and the way other asset classes are also behaving. I mean, it's been touted that Bitcoin will be the next gold. So depending upon how other store of values are performing, certain cryptocurrencies can be valued accordingly. But again, I would say it's entirely driven by speculation and demand and supply metrics. It's more like a speculative asset, right? So there are no, I mean, the fundamentals of economics or may or may not hold true.
I have one more question from YouTube. Manoj Mandal is asking, why is RBI banned cryptocurrency? Do you have any point on that you want to add?
I think they had certain legitimate concerns about cryptocurrencies being used in illicit activities and terror financing activities, and they banned. I mean, I would say it was more like a knee-jerk reaction. But again, that was beyond their purview, and that's why the Supreme Court struck the ban down. But again, the basic reason was they were concerned about cryptocurrencies being used in illegal activities.
Exactly. One more question, Debajani, if you can answer. Dr. Preeti Gupta is asking, please explain the future of digital currency in India, as we know that most of the people are not aware about this. And this is like a problem, right? Again, is it a digital currency or a cryptocurrency? I'm not sure, because digital currency, we can say this as a normal UPI payment, as well as I started with, like, money is part of virtual money and virtual money is part of digital currency or virtual currency. So first of all, we have to differentiate between that. But I hope she's asking about cryptocurrency more. If you can tell us more.
So as far as CBDC is concerned, of course, it would definitely come. But like Sarath already said, that perhaps we are looking into a time frame when we would be having cash as well and CBDC as well. So we have to come up with a hybrid model for some time. But then when somebody says that this is not possible for the entire India, then I would say that, yeah, I mean, maybe today we think so, but it's not that possible that it cannot happen over a period of time, because more than 90% people of India are on Aadhaar today. Even children are on Aadhaar, right? And people know how to use it. We are learning. We are good learners, Indians. So I won't say that it's not possible. Of course, it would take some time. So when I say CBDC, perhaps it's a mix of digital currency and crypto. Okay, like I already told you, it has got all the good values of crypto. At the same time, it actually doesn't have it discards the risk associated with crypto, like, because we have got a very good regulation and very good control associated with CBDC. So I believe that this is definitely a future for India, and it's why only India. If China could do it, why not India? Because China is also a popular state, right? So they also have a lot of people over there. So if they can learn, then why not India? So of course, I see the future, but how soon, that is something we have to see.
Yeah, I agree. and we have to differentiate between the meanings. Like, for example, cryptocurrency, crypto means cryptography, right? So it's not crypto because nowadays we have like different branches. We call crypto economics. This crypto economics is like an interdisciplinary branch in which people from economics and computer science work together and making this whole system better, so that it comes with digital currency, whether it's a cryptocurrency. So crypto means it's cryptography. I also want to add, like, for the crypto economics, this is why we choose this topic in this economics background, research scholars and professors, that we should look into the different domains now. For example, crypto economics is one of them. It contains various disciplines. For example, it includes game theory, it includes law regulations, behavioral economics, finance, and a lot of things. And even in the finance domain, we have a DeFi, decentralized finance. Now everything is completely changing. So we have to, so that is the reason why I choose this topic. This is so important for the economics people, because they are the builder of these economic policies, they teach economic students, and in future they will become the economic policy guys. So we should introduce new concept to them. And I want to, so we are in the last minute. So I want to take a quick concluding remarks from both of you. First, Debajani.
Yeah,
What do you think is the future of all these digital currency, virtual currency, cryptocurrencies?
Yeah,
And how, I also want to ask, sorry to disturb, but how these professors from economics background can use these kind of things and can pass this information to the next generation students.
of course, I mean, we keep on studying every day. Like we keep on, we are all researchers. Like so we have to learn it, and every day something new is coming. Like, let's say CBDC, how US is implementing it and how China is implementing it. There are differences, right? And also China might be coming up with features that US might not be having. US might be having features which Canada might not be maybe having. So even if they're neighboring states, right? So we need to keep on learning every day. But then I also want to tell all of you that digital identity should not be kept aside. These two work together, identity and CBDC, otherwise the purpose is lost. The control that we have in our mind, the regulation that we have in our mind would work properly only when our digital identity part is strong enough. So I'll suggest that you keep on studying every day. Keep an eye on the news, and every day there is something to learn.
Yeah, thanks, Debajani. Same question to you, Shah.
Yeah, and to add to Debjani's point, I would say if you talk about financial inclusion, this is one area where both cryptocurrencies, digital currencies, and CBDCs have a bigger role to play. There are so many people who don't have identity yet, and using the decentralized identity, these people can be given the formal access to credit in terms of microfinance, and with the advent of stable coins and players like Visa and MasterCard jumping into these areas, we will be able to offer credit to or financial services to people who still are not in the inclusion, I would say, inclusion area of financial services.
I agree. Thank you, both of you, and thank you for such a good introduction to a lot of things, right? From currency, money, to CBDC, to cryptocurrencies, and this is the first time we are doing this with the crypto economics. That's a background that we choose, and we want to introduce to the faculties as well. But thank you so much, Sharad. Thank you, Debajani, for having such a good discussion on latest technologies and latest currencies. Thank you so much.
Thanks.
Thank you.